What commodity would you recommend to a new trader?
I would recommend a commodity that doesn't move very fast because you want to have time to analyze it. I would say probably a slower trading commodity is probably a corn market. And I would make sure that you did a lot of research first, that you understood it, because there's two things about commodity trading. Number one, it's kind of like a basketball game. You know, it's one thing watching it on TV, it's another one playing it. So you want to make sure that you're emotionally prepared for whatever happens.
Crude oil. And the reason is because the math is easier, because every tick in crude oil is 10 bucks a tick. So if you don't necessarily have to have a calculator. If you're going in it from a speculative standpoint too, sometimes it's kind of neat to see what's happening in the world. And that helps you stay in tune to the world with politics, with economics. It also then plays into what's happening in the United States with how our production has improved.
For the average person that wants to be in a commodity market, not looking at the financials such as the S&P 500, which can bring a lot of excitement, I would tend to say stay with corn and wheat. Again, they are the food stuff, the feed stuff of life. They're large. Corn especially, it is a very large market. And the purpose there is you don't get necessarily as tied up in aberrations and swings because of extreme rumors. And in thin trade, sometimes those swings can be more than a person emotionally really wants to handle. So I say stay with the big markets like corn. If you want a little more excitement, soybeans is there, but soybeans is probably not for the faint of heart. You need to maybe have a little experience under your belt for that one.
I think you should look for a market that has good available information. So not necessarily whatever is the most exciting move. For instance, this year coffee has been wild. It has doubled in price in 2014 already. But to be able to understand that or to get very timely information on that is rare. So it would make more sense to me to start in something that just your average news source would cover. Oil is a good example. It's a good proxy of the entire economic situation. So anything that would affect the American consumer can affect the oil price, or global consumer can affect the oil price. They have mini contracts, so you can start at a lower price. So that is one example. Or in the grains, if you feel like you have a good understanding of supply and demand of grain, or what market factors would impact that, you could start in, let's say corn has very good open interest, and they have mini contracts, so they're cheaper. If you understood the spreads, the corn spread trades between each calendar month contract, that would be the best low risk, low price way to get started. And you'd really have to understand what's going on in the market, so you could become an expert.